Welcome back. We're continuing to understand the implications of this budget. We do have Sunil Singhania, the CIO, Equity Investments at Reliance Mutual Funds. Rajeev Gulabchand, Chairman and Managing Director of Hindustan Construction Company, is with us as well. Karan Chandna is with us as well, who's Chairman of the Amira Group. And we have Rajeev, Dimri and Gokul Chaudhri joining us from BMR and Associates. Thank you all so much for being with us. Sunil Singhania, why don't I kick off with you first? So we've had a lot of people saying, yeah, good budget, path-breaking, 8 on 10, 9 on 10. We even had one person saying 10 on 10. And then you look up there and you see that the Sensex is down rather dramatically. What is it that the markets know that the rest of us don't seem to know?
See, one is obviously this one-day, two-day movement in the markets leading to the budget as well as after the budget is we have been seeing, Vikram, for the last 15-20 years. We don't know how many years. Having said that, actually, if you just take out one company out of the equation, the markets are in fact up. So obviously cigarette duties have increased, and that one company is a big component of the index, and that one company is causing the index to look where it is. But overall, I think the budget from our perspective is very pragmatic. For the first time, we have a budget which looks at a 3, 4, 5-year perspective rather than looking at from a 1-year perspective. So I think overall, don't look at the Nifty. That is one company causing it. Overall, I think the markets are also pretty okay with the budget.
Right. So that company obviously being ITC, which is down very sharply because and actually during the speech there was no mention of cigarettes. So ITC stock was up, and then suddenly people read the fine print and said, oh my God, not only is there a hike in excise, it's a rather sharp hike. So ITC's fallen. But elsewhere, if you look at the markets and the way the markets have reacted to it, what is your sort of a take on how they will play it going forward? Markets have been doing really well for a while. At the end of the day, would they still say that the bull market is intact and we might be heading for those really high targets in the next few months?
See, Vikram, very clearly budget is definitely an important document for us, but it is not the only thing which dictates the market from a medium to long-term perspective. In fact, from our perspective, we feel that yes, this was a big event and that event is out of the way. Now we can focus on the actual improvement in fundamentals and the actual way forward. And if you actually look at all which has happened as far as the economy is concerned, as far as the political environment is concerned, as far as the will of the government is concerned, I think the same thing has got reinforced in this budget. So the budget does not seem to sway from the stated part of bringing back the economy into the growth area, focusing on the much needed infra push, the Make in India push, and so on and so forth. So we believe that after this initial reaction, whether positive or negative from the markets, I think we will again head back to the fundamental aspects, and that would predominantly lie on whether the economy comes back to that 7-8% growth level, and whether the corporate profits again chug forward. Obviously, what we have to see is the RBI's reaction to this budget, because that will be very key as far as interest rates are concerned. So overall, our view is that the markets will again look at the fundamentals, and our view is that we are heading for positive times.
Right. So specifically, if you're looking at various sectors, obviously we saw ITC doing nicely and then hitting a wall and sort of coming off very sharply. Other than that, for the real estate sector, there's some pass-through of rates, infrastructure spending likely to go up. So sectorally, any trends you take from this?
Actually, again, there is no one sector which has been sort of given a push. Having said that, the focus is clearly on the domestic-oriented, growth-oriented sectors. And one important thing which we would like to highlight is that in the central outlay, the Ministry of Roads and the Ministry of Railways, their allocations have gone up significantly, almost to the extent of more than 50 to 60% compared to last year. So very clearly, the government is focused on the infrastructure bet, and I think these few sectors should start to see a lot of interest going forward. Also, the fact that they have streamlined or at least removed the anomaly between FPI and FI might make life easier for a few banks where one limit was hit and the other was not, and they should benefit at least from an equity market perspective. I think the bigger focus from the government, which has been on gold monetization, that should bring in a lot of capital into the economy from so-called dead asset. and also the fact that compliance has been given a big push. Our view is that in the next 2-3 years, the tax inflows or the tax revenues should start to surprise on the upside. So without pointing out or without having a very strong view on one or two sectors, I think it's more a budget focused clearly on bringing the GDP back to its rightful place of 8-9%, in the new series.
Perfect occasion to get in Ajit, and then I'm going to come to Karan on agriculture. Ajit, on infrastructure, which obviously is one of the big things that we are having, you've seen a certain sort of amount of signaling from the government, not just in terms of infra bonds, but deferring the fiscal consolidation to say, let's find some money to invest into infrastructure. Are you happy with what's been done so far?
Yes, certainly happy that a huge outlay on infrastructure has been announced. They talked about $1 trillion spent on infrastructure over the next 5 years, which meant about 200 billion every year, which I think, having said that 70,000 crores additional will be put into infrastructure, and this also he felt is inadequate. So he himself is admitting to the inadequacy of what he is doing. But managing fiscal prudence on one side and yet spending on infrastructure and cutting down on some of the consumables, I think is a very strong signal and strong step. Second is deepening the bond market by creating the possibility of long-term debt bonds in this country. I think is a much awaited move, and I hope they succeed in doing that very well, so that infrastructure can find money for long-term over the next few years as we go.
Ajit,
what
you
is
and
very
others
nice about this budget?
Ajit, you and others in the infrastructure sector have been concerned about the number of projects that are held up for one reason or the other, which has also led to a certain amount of over-leveraging of many Indian infrastructure players. Anything at all in this that will help in unlocking that entire jam that there is?
On this score, there have been some directions given in the budget. One, that they would try to create some kind of a settlement commission so that we can resolve these disputes and make the payments quickly. They're also thinking of a new kind of law as to how disputes will be resolved or the processes to be followed, so that the bureaucrat does not feel afraid in taking decisions on the matter. And with the modification of the Arbitration Act, which is underway, I think a lot of these problems will get resolved. Not immediately, but over the next year or two. And I think to that extent that this problem has been identified and they have sought to address it. But it, in one case, calls for a new institution, another case calls for another act to be first passed. So there are some yet, it's not a clear path to where we are going, but it is in the direction of trying to resolve these issues. And then one bigger thing that they've said, when it comes to infrastructure, whether it's construction or concession, it comes under the larger understanding of the word procurement for government. And to get a procurement law in place would have an enormously beneficial impact on the country, so that across the country, the practices for procuring will be more transparent, more fair, and will be followed equally everywhere, and not having to juggle yourself all over the country in different ways. So I think lots of good intentions, lots of decisions in a roadmap. Now we have to wait for the implementation.
All right, Ajit, thanks a lot for joining us with that perspective. Thank you so much for being with us. Karan, let me get you in on agriculture, which is something actually we haven't spoken about that much. Obviously, that is still where a large number of people actually are residing and getting their livelihood out of. What do you think he could have done differently?
I think first of all, let me start by saying we welcome the GST. I think that was long awaited. I think that itself will have a tremendous impact. And here's why. Agriculture on one side and food is the final product. People normally talk of farm to fork. And the fork end has been clearly defined. GST is coming in. What we'd like to see greater clarity on is how the agriculture side pans out. So what I'm saying is the center-state divide needs to be done away with. We have seen the finance minister talk of a unified farmers market. I believe that is the path to it, but we'd like to see finer detailing on that, like GST makes the country into the first step towards a common market. Similarly, sourcing, supply chain needs to come in for the GST to have tremendous benefit on the food side. Like you rightly point out, more than 55% of our population lives off the land. So if we can raise farm incomes by bridging this center-state divide, and on the other side, consumption is more regularized, rationalized through the GST so that we are not overburdening our consumers by multiple taxes. I think that is a clear aspect. And what that leads to is private investment. Today, investment into agriculture and food is lagging. Reason being, India is not a common market. So if I set up a large-scale infrastructure for agri, I cannot bring in produce from different states without multiplicity of taxation. That
will get fixed with GST, but are you reasonably confident GST will come as he's saying now? First
That's why I'm saying I welcome it and I hope it does.
Okay. Prashant, markets, any points to throw to Sunil?
Sunil, good afternoon, Prashant here. So, let's just look ahead a little bit. I think you said the RBI so RBI, when they cut 25 basis points, expectation was that right after the budget there'll be another cut. So that ain't happening anymore, right? I think we can safely say that. How do you think that dynamic will work? Because the market borrowing is some 6 lakh crores. The expectation was about 5.5 lakh crores. And of course, the 3% of fiscal deficit only by fiscal 18 now, 3 years from now.
See, one is, I'm not an economic expert, but having said that, I feel that there is definitely room for surprises on even the borrowing aspect. If you read the budget a little bit in detail, the subsidy burden is expected to go down only slightly, which is a little bit perplexing, with the kind of fall which you have seen in the crude prices, the fact that most of the, diesel and petrol are now market linked, and also the fact that we have this DBT which is starting to play. Our view is that the subsidy burden will be much lower than what has been envisaged in this budget.
No, the number which has been envisaged, Sunil, is 30,000 crores. The budgeted number last year was 63,000 crores. So there is a big drop, right?
No, the total subsidy burden was envisaged at 2,60,000 crores, which has come down to only 2,30,000 crores this year.
The total,
there's a fall
okay.
of only 30.
Okay.
There's a fall of only 30,000 crores. So that I don't know. And as I said, I'm not an economist. But what RBI does is not going to be dependent only on 1 or 2 numbers. RBI, when it cut rates last month, was very clear that they can see sustainability of the inflation being low, and the fact that we have seen some reduction in fiscal deficit. Obviously, the markets expected 3.6, it has come to 3.9. But very clearly the focus has been on fiscal responsibility, and with this benign interest rate environment, our view would be that definitely more cuts are in the offing. Whether it happens immediately in the next 2-3 days, we don't know. So it's a question of when rather than whether. But our view would be that we are heading into a substantially low interest rate regime.
Okay, substantially lower interest rate regime. Karan, just wanted to throw one more point at you, which is when you're looking at what's being done with subsidies in general, and food subsidy in particular and other subsidies, he seems to be moving from the traditional way of doing subsidies, which is also distorts factor prices to some extent, to saying direct cash transfers, use the JAM scheme, have a social security net. Is that the right direction to your mind?
I think that's completely the right direction, and I think another way to look at the subsidies has to be more realistic. On one side, you talk of food inflation. I think that's more urban-centric. And at times that has actually misled the reader and the viewer to thinking that even the farmer complains of high food prices. That's something we have not seen. What this translates to is expecting the farmer to subsidize the urban poor. I believe in this rationalization of subsidy, the government needs to come out with a mechanism to subsidize the urban poor, at the same time not penalizing the farmer by expecting lower food prices. At the end, on one spectrum, we have the minimum support price. Wherever the minimum support price is effective, and the Food Corporation of India is doing a great job in buying produce, you have agriculture income growth, land prices are a factor of that, and livelihoods are clearly impacted. I think that must continue, and the offset of subsidy into the urban and the suburban centers is required. A mechanism or one of the direct impacts of that, whether it's through cut of tax or a direct transfer, must be an enabling mechanism. And our tendency to talk of food inflation and make a big deal about it must be looked at in a deeper manner.
Right, fair enough. Well, Sunil, any final thoughts before you leave us?
No, as I said, budget is obviously a document which is very important. But our view is that the next 5-7 years are going to be great for the Indian economy. We are in a unique situation where globally countries have to increase interest rates, but we have just started the interest rate cut cycle. Also, globally, economies are seeing lower growth, and we are heading into a situation where growth rates can only accelerate from here. So I think we are definitely in a good position. We have good governance right now. We have a scenario where the Prime Minister and all his cabinet colleagues are clearly working towards bringing the economy back to that 8-9% level. And from an investor's perspective, look at it from a 3-4 years perspective, and we are very confident that equity would give good returns.
All right, Sunil, thanks a lot for joining us. Rajeev and Gokul, let me get you both in now on direct and indirect tax. Now that you've had some time to digest it, what to your mind are the key highlights? If you had to just sum up the key highlights of the budget.
Well, 3 things really come out. He has reaffirmed his commitment to GST. He's talked about deferral of GAR, and he has certainly talked about how he wants to try and deal with some of the investor concerns. Investors had concerns building up for a period of time, which were inhibiting capital flows. And I think the finance minister in this budget has done more to be helpful to international investors than ever before. So I think as a takeaway, the headline news and the fine print too supports it, is that it's a very helpful and pragmatic budget.
Okay, your sense?
I largely agree because what this budget to me represents, besides the specifics on the indirect taxes, that there is a desire to think fresh, and some of these things have been talked about, whether we've scrapped the Wealth Tax Act or this commercial dispute resolution. Some of those things are fresh thoughts. The whole emphasis on black money, which has been identified as a big problem, an actual concrete step. Yes, a big move on GST, although it still represents a promise. There is a long road to be covered. But if that happens, it would be a monumental change and a game changer, as he himself put it. So we will keenly watch this particular session on what development happens on GST. On specifics of indirect tax, very curious, perhaps needed, that the service tax rate is now higher than the excise duty rate. And large part of the increase in the revenue in this budget is on account of increase of service tax rate. So clearly, the maturing of the service segment and the taxation of that, which is the step towards the GST, which needs to unburden the manufacturing sector and let the service sector, share the burden. All that is
So are you concerned as to what that might imply for the GST rate? All these celebrations could come to an end if that rate is too high.
In a sense, the rate, if we assume a GST scenario, the rate of service has to go up. Now, not all of that will be kept by the federal government, but the effective tax rate on GST will go, and therefore it's a step in the right direction. I am not reading that this increase means that we will have a 25% GST rate. I'm not seeing that nexus.
All right, we have to slip into a break. Sunil, thanks so much for being with us. Karan, thanks for being with us as well. We're going to come back in just a couple of minutes with Sunil Kant Munjal is going to be with us, and GV Sanjay Reddy is also with us, Vice Chairman of GVK. We'll come to both of them and we'll come back after this break. Welcome back. Well, we have with us Sunil Kant Munjal, Chairman Hero Corporate Service Limited, and GV's Sanjay Reddy, Vice Chairman of GVK. We've also been joined by Ravi Uppal, Managing Director and Group CEO of Jindal Steel and Power Limited. Thank you all so much for being with us. Mr. Munjal, can I start with you on the crucial parameters on which you would have thought this budget should be measured? showing signaling reform, showing that this government means business, saying that India's growth story is here and here to stay. Has enough been done?
I was just making notes while he was speaking. I noted about 20 things that we had recommended would be useful to indicate that there is forward movement on all these fronts. These are 20 things that he actually did announce of the recommendations that were made earlier. So I would say clearly it's a very forward-looking, especially considering the economy both in India and globally, and also considering that a much larger portion of the allocations will now go to the states. He still managed to do a pretty significant amount. The other good thing that I like is he's created predictability. Predictability of taxation, of regulations, bringing in things like bankruptcy laws, because we are asking for ease of doing business, which is not only in starting and running a business, also necessary if you want to shut down a business or you need to shut down a business. He's touched a very wide spectrum of Indian society, as also a very wide spectrum of the economy itself, right from farmers to the disadvantaged, to the disabled, to the middle class, to the very wealthy. Of course, for the wealthy, he's raised the taxation a little bit. But I would say all in all, he's done a pretty phenomenal job, considering that industry was saying public spending needs to get increased to bring in more dynamism in the economy, which is what he has done. So I would say all in all, a pretty good job.
All right, Mr. Sanjay Reddy, would you agree with that view? And specifically when it comes to infrastructure and the problems that many private companies have been having, especially with indebtedness, are you happier than you were this morning?
Yes, I think I agree with Sunil, and I think it's been a very good budget. I'm sure everybody will agree that the amount of focus and attention he put on infrastructure, no other sector carried so much attention. Starting with the fact that everyone knows that the challenges that the private sector and infrastructure is going through, it was absolutely critical to kickstart again infrastructure investment, to start public spending. He spoke about 70,000 crores more than last year, then 20,000 crores setting up a fund and various other schemes, and I think that was critical. But equally important, I think the recognition that going forward, public-private partnerships will only happen if the sovereign takes a lot more risk and there's a rebalancing of risks in the concession agreements. I think that is critical. Now, obviously, the question you asked is that what happens to the past in terms of all the stalled projects. There's a lot of things that the government has already done, and we are hoping a lot more will be done to address project-by-project issues, to unlock the value of these projects so that as a country we benefit, because there's more than 4 to 5 lakh crores which is stuck. But overall, I think from the infrastructure sector, it's, I think, extremely good, and I'm sure that a lot of foreign investment which is waiting on the sideline will seriously start looking at India, which is obviously a shining star in today's world. But one has to look at the details, because today's investors, especially international investors, hurt in the past, have become very careful. While they're very keen to invest in India, they want to wait and watch and see what exactly happens on the ground, and then I think it will be better. To be practical, I think another 12 months to 18 months before private investment in infrastructure sector and the PPPs will start getting off the ground once again.
So you're saying they're going to wait and watch. What specifically, to your mind, will they be waiting and watching to see? How all of this rolls out, or are there any other announcements or policy steps that they are waiting for? Or have most of the important announcements now been made and they're waiting to see implementation on the ground?
No, for example, if you take the National Investment and Infrastructure Fund, I think it's a fantastic idea. It's something we've been speaking about as to generate resources, especially debt, but more importantly, equity. If you see the amount of pension funds globally that's interested in India, there's trillions of dollars of pension funds. But the problem is that they don't know which vehicle to come into, because they don't want to come specifically into projects per se. So we have to see what exactly this means, the National Investment and Infrastructure Fund, and how it will be managed. There was a mention about using that money to fund other institutions, equity into other institutions which will leverage it further. But does it also fund specific projects? And how that will pan out, that is one such example. The PPPs, for example, in the last budget there was a mention about 3P India. After that we haven't heard about it. So this rebalancing of these risks, how will it happen? We've already seen recently that in the road sector there is a new annuity model which has taken away the traffic risk from developers. So things like that, I think we need to see more of that, and these are all for future projects. But I think what I want to see also, especially foreign investors, what happens to the past projects? A simple example would be, for example, most of the projects which are in operations where investors are very keen to invest. Can private investors sell those projects because they are lock-in provisions? If we are allowed to do that, then we can recycle the capital. So there's lots of small things that need to happen. I think what this budget gives a very clear direction, a very clear intention, the very clear recognition that without infrastructure, whether it be a Make in India, whether it be GDP growth, nothing is going to happen because infrastructure is the foundation. So I think the government's recognition is very clear. We have to obviously see how that will pan out into real action. And I'm quite confident it will because, you know, even in the last few months, we've been hearing a lot more noise in government about doing things more and more to clean up the past.
Right. Sunil, you said there was as many as 20 things that he actually did. You want to draw attention to one or two of them, and also which are the next 2 or 3 steps which you still think you're waiting to hear or see from the government? Anything else that's still on the agenda?
Sure. So the good things were things like fiscal consolidation. Okay. He announced it, but also he said, I'm pushing back the terminal date for 3%, which is actually absolutely fine, because we have been saying now for a few months that public investments need to come in to allow the private investment to start crowding in, because consumption is not quite taken off in India. So I think that's a very good thing. Announcing a definite GST date is a very good thing. Announcing a bankruptcy law, which will be, it's still important, as Sanjay is saying, to see what is actually done, because these are mere announcements at this moment. Some of the things will lead to committees being set up. Some of these will lead to regulations being set up. So we don't have enough visibility into some of that right now. I also like the idea of opening up the agriculture market to build it into a single, because we've been talking of GST as one market, but don't forget that agriculture was still excluded from there. So if agriculture becomes a common market as well, it's a big, big boost for farming and for the overall economy. So there are some really dramatic moves, some little moves. So I think it's like a workman's budget, which will have a big impact on the overall economy and direction in which it goes. I like the fact he's telling you what taxes are going to do in the next 3 or 4 years, which is what many other countries do. And I wish we could make most of our policy making predictable in this same manner.
All right. Well, Mr. Munjal, Mr. Reddy, thank you so much for joining us with that perspective. Sensex trying to make up his mind whether it wants to be in the red or in the green. But although, Prashant, I'm sure as you take us through it a little later, it's interesting to see if you take out the ITC impact, what would be happening there. I suspect it will be in the green by some amount. Mr. Opal, let me get a quick take from you on what you just heard. Would you by and large agree with the sentiments being expressed from Mr. Reddy and Munjal, or are there some doubts that you still have?
Oh, well, I think broadly I agree with what they said, that the government basically, it had to be very consistent with what they actually laid out. Last year, in spite of the fact they had just about 2 months to make the budget, but they articulated the vision very well. And this year is basically reconfirming that they stay course and they're not going to take any deviation. They have reiterated their commitment to, larger spend on infrastructure. They seem very focused to see that the manufacturing should get back. But this is so far so good. But let me just say, take a little bit of contrarian view. Since I'm connected with the mining industry and the steel and the manufacturing, I think that what I was missing into this budget was government getting a little more into specifics about the manufacturing industry. For example, if you take steel, I mean, it's no secret that the steel industry in India is going through a very tough time at this point of time.
Right.
I would have at least liked to hear from Finance Minister that he does acknowledge that the steel industry and the mining industry are going through a tough time, of what measures they're going to take to make sure that this industry comes up, because steel industry contributes nearly 3% to the GDP. So nobody can afford to sort of ignore that. So I would have liked to see that he at least acknowledges that we need to help it out. They should have given some kind of protection against
I think
dumping.
import duty has been increased.
Well, it might be there in the fine print. We are yet to see as to how much have they done, but he didn't make any mention in his.
So I'm going to get Prashant to take you through some more details on this, and Rajeev and Gokul, please stay on as well. We need to get a little bit more detail and into all the details here, which Prashant is going to be doing. I'm going to slip into a break. After that, I'm going to be calling it a day just for a moment, but Prashant is still here to tell us exactly what lies in all of the... Prashant, you've been reading all of these documents in great detail, and he's going to tell us exactly what's in all of them just when we come back after this break. Do stay on with us.
Welcome back. You're with us here. Last 30 minutes of markets, actually 17 odd minutes to close. It's a Saturday, but markets are trading, and it's been actually quite volatile. We got about 50 points higher on the Nifty, and there's been so much up and down. But finally, I think we'll end the day higher, unless, of course, next 15 minutes, we see a sell-off once again. But for now, 130 points on the Sensex and about 50 odd points on the Nifty. Mid-cap index is up. Mid-cap index is actually down. It's red and green, so nothing there. Small cap index is down 0.5% or so. Broadly, it's not really, it's not a outside, except say private banks or say ITC. There's nothing outsized anywhere. ITC, of course, is down very meaningfully, and private sector banks are higher. I guess largely because of the differentiation between FPI, that's foreign portfolio investment, and FDI being removed. They'll be treated the same, which means FIIs can buy more of these two companies, especially Yes Bank and Axis Bank. FIIs couldn't buy more, so those two stocks are reacting the most favorably. I think HDFC Bank. We had Keki Mistry earlier, and I asked him whether this would facilitate merger at some point. They don't rule it out, but they don't say yes also, obviously not. But that's where it stands. That's the market for you. We'll come back to this in a bit. Ravi Uppal is with us, and we've been chatting with Rajeev, Dimri, Gokul, Chaudhri, and Mr. Pradeep Chaudhri is joining in as well, ex-chairman, State Bank of India. Thanks very much, sir. Thank you, everyone, for staying on. I'm being told Prashupati Advani is joining us from the Mumbai studios as well. Mr. Advani, thank you for coming in. Good having you here. Mr. Uppal, I'm just going to come to everyone, but we were talking about the steel sector. You're saying manufacturing. But I think it's now being confirmed that import duty on steel has been increased.
Well, I'm told so.
It was some protection.
The FM's announcements, but I'm told that there's something which is there in the final print.
Yeah.
The steel industry really needs to be sort of helped. It has touched its lowest point in the recent years, and I think the government really need to offer it some kind of protection, because the people that you're fighting against, they're not on the level playing field. Whether we talk of Chinese or the Russians, each one of them is driven by a different consideration. So therefore, I think government really needs to be extremely sensitive to steel industry, and the steel industry has gone through a tough time because of the mining issues that they have faced with regard to the iron ore, the coal, etc.
Yeah.
I think therefore I would expect government really to sort of stand by its industry, especially considering they want this industry to triple its capacity from 100 million tons to 300 million tons in the next 10 years' time. So that's one part.
I wanted to get your thoughts on what he said. He said that they need to revive the private-public partnership model. And they said the sovereign needs to take a lot more of the risk, not all of the risk, but more of the risk. Now, one can debate where did the PPP model go south, but it did, right, for a variety of reasons. Now let's take coal auctions, which recently concluded. You actually stood out. One could say, got a great deal, but obviously you did it with your smarts, and you bid reasonably well, and you got that mine. A coal block actually at a very reasonable price. A lot of the other players, especially in the power segment, have bid at they basically said that they don't have any cost of mining, right? And how is it going to work? I mean, I'm just trying to understand this, using this to understand the broader public-private sort of, the government and the private sector working together. Because now when I speak to people in the industry, they say, well, for the power sector, all PPPs, for example, will be renegotiated. People will go to the court. new PPPs, power purchase agreements. We don't know what will happen. Power tariffs will go up, and so there is no real clarity. Same thing happened with roads in 2011, 2012, right? Now, I'm just trying to understand what is the way forward. The government constructs, builds everything, and private sector operates. That's the only solution.
Well, John, I think the PPP model has to be basically renewed. It started with a lot of expectation some years ago, but then something went wrong along the way because the roles were not clear as to who should be doing what. Is one going to be investor, and second is going to be operating the asset? So I think we need to bring that kind of clarity. But as we sit here in 2015, I think what is very important to know that the government has to invest a lot more at this point of time, because the private sector is not in a position, at least for the short term. The fortunes might improve in the next year or two. So at this point of time, I think the government has to play the role of the investor, and they have to take the private parties on board to sort of maintain the assets and they operate the assets. I think that kind of role clarity has to come, and then it will work. But if both of them are going to do both the things, then you have a conflict
now I
which
think
is
it's pretty
natural.
clear. I think Mr. Jaitley said it in so many words. It's that the government sovereign has to take a lot more of the risk.
That was
That's
really
as clear
statement.
as it gets.
That was a good statement by him.
Right.
So I think brings some amount of clarity.
Right.
And as regards to your question regard to the coal mines, of course, the government is auctioning the mines, and then the
Phase
people,
2 will start this week, coming week.
Schedule 3 is going to start this week. The Schedule 2 has gone on quite well. It went as per the time frame the government has said, and I must say, government did really a good job for once they have really delivered according to the timelines which were considered. And but you mentioned about the pricing in the coal mines. I think the one has to go very carefully on this, because here are we signing contracts which is not going to be limited to just 1 or 2 years. It's going to be there for between 20 to 30 years. So Coal India is also going to ramp up their production. So they might come in the market with the coal at rates which could be more competitive than from your own block. So therefore, anyone who's going to acquire a block and operate the block has to be very mindful of what the future will pan out.
Actually, the question to ask is, if all these guys are saying that we have no cost of mining, why does Coal India charge the price it does? I mean, you can put the question on its head.
I would say that the way the coal pricing has gone about is somewhat unrealistic.
Unrealistic. That's the point. That's the point.
So I don't think Coal India is wrong in claiming
I
that
don't mean to suggest that. I was just saying that
mining. I think it's basically an expression of people's anxiety to gain access to the coal. It's more than anything else. But I think as more sort of auctions come along, I think you will see prices will become more realistic. I think this is a part of the initial reaction that everybody wanted to grab something, and also for the fact that these mines are operating mines, and therefore those who wanted mines immediately, they paid a price for that.
They paid a price for that. Mr. Gokul, thanks very much for coming in, sir. Thank you for sharing your thoughts with us. Appreciate it. Thank you. I'm going to come to all of you in just a bit. Mr. Ramesh Damani is joining in right now, and when you talk about Indian stock markets, if there's one person who springs to mind, it's Mr. Ramesh Damani. And, that's the name which most resonates with viewers, our viewers, at least. Mr. Damani, thanks very much for coming on. Great having you here. I want to ask you, how would you rate the budget? What was, would you say it was good, it was above, it was better than good? How was it?
Thank you, Prashant. Thank you for a very nice introduction. We were going in expecting a big bang budget. We got a big, bold budget. So I would say that it delivered on a lot of front. If you particularly look at, is the budget helping us create a more equal opportunity society? Is the budget laying out the intellectual architecture of what we expect India to look in the next 3 to 5 years? I think the budget scored very heavily on all those points. So this is probably the highest rating I've given any budget over the last decade or so. I would give it about 8.5 on 10.
8.5 on 10. I know I'm nitpicking, but for the RBI, how would this mean? The RBI response function on interest rates, fiscal deficit being controlled, delayed consolidation. It was necessary, all for it. But what would be the RBI response function?
It would mean, of course, that there would be a slowdown in how fast interest rates go down. But I think it's all but inevitable that interest rates will go down. It's just the pace that now to be determined. The fact that we are trading at historic levels of interest rate compared to the rest of the world with the currency now very stable, means it's inevitable they'll go down. I think I won't be surprised if they would, at least the first leg happens in the next few months, and then there's a holding period. But, I think it might delay it a little bit, but it's not going to be postponed indefinitely.
The FM said that of all his net tax measures, the net impact is that he'll collect about 15,000 odd crores or so. Is it cutting it too close in terms of revenue generation, Mr. Damani? In terms of, if oil were to go up, who knows, significantly, oil prices, are we back to worrying about how to manage the balance sheet?
Oil prices go up is a huge negative. That would be a problem. If it went beyond $75, $80, that would be a huge problem. In terms of benefits to the consumer, we're already taxing it, so the fall is not going directly to the consumers. It's helping corporate India. It's probably helping, the government of India, but not necessarily the citizens of India. So that would be something, of course, that you worry about. But if you assume a GDP growth of 8%, 8.5%, there's going to be a natural buoyancy in tax collection. So I think even though he's done a lot of giveaways or reductions in corporate tax, in other taxes, exemptions for individuals, I think the buoyancy will help him probably overshoot his target by more than 15,000 crores for the additional collection.
Right. How do you, would you say the full impact, Saturday is working for us now today, but a lot of foreign investors aren't in the market. I'm assuming the big ones would be there. But would you say Nifty right now is up about 0.75%? We're seeing the full impact of what they call all market participants, or you think we are yet to see the full impact? We'll only see that on Monday when global markets are trading as well.
Yeah, well, the 2 points in that, Prashant. First, of course, is that ITC has been a big down. It's down 10% or almost record volumes.
Yeah.
About 5 crore shares of ITC have been traded between BSE and NSE. You remove the impact of that on the index will be very sharply positive. And yes, you're right, the devil is in the details. Sunday we'll all get back, read the text speech of the budget, analyze the impact on various companies, talk to managements. I think Monday will be a fresh look at the market with very good activity and very good volumes. But my sense is when all the dust settles and all the tea leaves have been read, we would find that the bull market that began 18 months ago is well and intact, and there's a lot in this budget that will propel the market higher. And I see no reason to fear the budget beginning next week.
Since you bring up ITC, do you have any view on ITC? It's a pretty meaningful cut, about 35 rupees or so on ITC. And it's not recovering. Usually it sees a cut after an excise hike, but it gets bought into today. It's not happening.
For the last 2 quarters, ITC has been reporting that demand for cigarettes, which is generally considered inelastic, has become elastic. As the duties have risen, people have actually cut back on smoking. Now that's a great social good, but bad necessarily for the company. So I think this additional hike is going to impact them negatively. Remember, I think almost 75-80% of the profits, or maybe 95% of the profits, come from the tobacco business. So I think the years of the free pass-through, the consumers would smoke despite higher duties, is perhaps now over. So there is a challenge faced by ITC management, not only to regain the profitability of the tobacco business, but to move the FMCG business into profitability.
So it's all clear for the bull market, Mr. Damani, you would say? And we're pretty much in a bull market. Small corrections, but max 5-7% on every few months. But that's about it. Very strongly in a bull market, right?
I think so. I mean, I think no evidence to shake that. The bull markets don't end when people are predicting bull markets are going to end. There's a lot of anecdotal evidence. There'll be a huge amount of gossip on the market, huge trading volumes, bad quality companies will go up. Here we see the good quality companies go up, the Bosches, the Ikers, the MRFs of the world. The leadership in the market is intact. Retail has still not come back in a big way. So I think this bull market has legs and has fairly substantial legs. So I think we're just perhaps scared by the rise in the market as it's gone up from 16,000 levels to almost 30,000 levels. But I think other than that, all the internal indicators that we follow suggest that the market has, to use the meme of the time, achhe din ahead.
Yeah, we didn't hear that today, but I guess can't get very far away from that. So, but the nature of the bull market also is going to be what we've seen. Big gets bigger, right? That's what we've seen. Big continues to get bigger and bigger.
one thing I've noticed that every bull market is bigger than the previous bull market. There's more money to be made, more opportunities to be made. And if you look at some of the provisions, they want to, the BJP understands that India is slow in manufacturing, so we're not going to create that many manufacturing jobs, even through a push in Make in India. So they're actually going out and encouraging an entrepreneurial culture, encouraging self-retirement. So all these things will actually add up to job creation, maybe in the self-employed sector. So, I think there's reason to suspect that as people realize returns in gold is dwindling, returns in real estate are dwindling, people will find investing in equities more attractive. With the corporate tax rate coming down, many large companies will report better earnings over the next few years. So it still adds up to a really good scenario for Indian equities. There's no reason to, believe that this bull market is on its last leg.
Mr. Damani, thanks very much for that. Great talking to you. Appreciate you coming on today. Thank you. Let's take a quick look at the market. We're basically closing shop today in markets at least. So 84 points on the Nifty, and you got about 250 odd points, 240 points on the Sensex. And ITC is the big cut and the big gainer, almost equal percentage gain, 8% off on ITC, 8% higher on Axis Bank. The weightage, of course, is very different. ITC is the largest weighted stock on the Nifty, so that's going south. And if that were not the case, the market would have been higher by at least 1.5%, if not more. So that's holding it back. IndusInd Bank, private sector banks, Axis, IndusInd, Kotak, top three gainers, 8, 6, 4% respectively gains. Sun Pharma follows with about a 4% gain. Tata Motors is up 4. ICICI Bank is up 4. HUL is up 2 3/4. Then you've got Bank of Baroda, Dr. Reddy's and Cipla, which is up about 2.25% as well. 37 higher, 13 down. That's the advanced decline on the Nifty 50. I think the closing bell should go off any time. And, that's what you got. Axis, tremendous gain. Essentially, FIs can buy more of the stock. That's the news. And Axis, of course, is a corporate bank. Lends to a fairly large exposure for a private sector banks to the infrastructure sector especially. Pashupati Advani is with us. Pashupati, thanks very much for waiting. How would you rate the budget?
Well, I actually like the budget because I think that given the 5 constraints that the finance minister mentioned in his speech, he's done a remarkable job of trying to balance everyone out. What he has done is, according to me, opened up all the doors and said, now India, you have to do your part. Government, you have to do your part. States, you have to do your part. And if we work together, India can be the best country in the world. And what he's done is he's opened, he's pushed everything, that all the impediments out of the way. He's taken away, let's say, for example, the place of establishment issue for FIIs. He's pushed away GAR for 2 years, saying, okay, I'm bringing in GST. Everything, the roadmap is there and the consistency is there. And this is what basically foreign investors have been looking for. This is what domestic investors and people who are planning to make capital expenditure have been looking for. So hopefully it will start. Now it will take 2 or 3 years to deliver, but we'll begin to see some minor changes, and that's all he needs to basically make everything work. And I think he's increased service tax to 14%. That's simply because I think when GST starts, it should be probably between 16 and 18% once it gets going. So he's got to take the rates up there. Going back to Ramesh's comment about ITC, obviously cigarettes get beaten up in every budget, and this is one of them. And as he mentioned, the elasticity of cigarettes is probably what's dragging the market today. Otherwise, we'd be a lot happier.
The government owns a significant chunk of ITC. I wonder why they didn't sell their stock first and then increase excise duties, because they'll be able to sell at a much lower price now. Maybe unless, of course, people change their mind and bid the stock higher. It's happened before, can happen again. Pashupati, but there was large expectation that MAT on SEZs, for example, could be done away with, could be lowered. I don't think that has happened. In terms of actual things to boost Make in India infrastructure, is there enough?
Well, it's not enough. It's a question of, I've opened the door. Now you start implementing. You tell me what the problems are. I'll change it in time. I think the issue is that, he can't just say, the government can't just shut down and say we don't want to collect any more taxes. That doesn't work. So what he's saying is that, you show now it's corporate India and India Inc. and the foreigners who are looking at investing in India. It's their turn to step up to the plate saying, yes, we're serious about doing things. Whether they want to do it in an SEZ or they want to do it in a port or they want to do it outside the SEZ, time will tell, and then I'm presuming that this government will then make it easier for them to do so. Because one of the things that the FM mentioned in the speech is he's very conscious of the degree of difficulty of doing business in India, and he's trying to improve that number radically. I mean, we are actually probably at the wrong end of the scale for that statistic globally.
Pashupati, thanks very much. Quick comments. Appreciate you joining in with that perspective. Thank you. Let's take a quick break. We're coming right back, and we've got Mr. Rajeev Dimri, Gokul Chaudhri, Prateep Chaudhri here, and we're going to come to them in just 2 minutes. Take a break.